Per usual, again, this channel is for educational purposes only and is not intended as financial advice. It is Sunday, Setup Sunday. Let's take a look at what I think are the most important setups of the week across multiple markets with a focus on Bitcoin. I was going to say crypto, but it's not. It's Bitcoin. It's all about Bitcoin right now. Alts really only matter post-halving for Bitcoin. That's when liquidity tends to come back into the ecosystem as a whole. And if you're unaware, I do Macro Mondays, Teaching Tech Tuesdays, Altcoin Wednesdays. I do a live stream Thursday, and then I do a podcast with Ledger Brian on Fridays. All of it posted on Twitter. Give me a like, give me a thumbs up, or a dislike, whatever. Anyway, Setup Sunday. So until this setup is nullified or hit on its target, this will be the most important setup in all of crypto. As far as I'm concerned, my entire world is focused on this exact trade. If you're unaware, you're looking at the Ichimoku cloud with those specific settings, 2061, 2030. I've adjusted the settings from default for two reasons. One, crypto is not 9 to 5, it's 24/7. And two, I've then doubled the settings from there in order to decrease the noise and increase the signal. For above the cloud, we are bullish, below we are bearish. And if we are inside of the cloud, we are non-determinant, range-bound, messy, do not trade zone. But in this very special type of trade, where we go from above or below the cloud and into the cloud for the first time, that historically has had an excellent hit rate as far as reaching for the other edge of the cloud. So these are called edge-to-edge setups. What you're looking for on these specific trades is a bullish TK cross, which we have, and price within the cloud, which we have. Now, I'm a little bit nervous about this setup because typically when we get these trend reversals, we usually have some sort of reversal pattern on our side as well. We don't really have a chart pattern here that I can really see. This may morph into a really ugly sort of massive cup and handle, but then people are going to argue with me and say, you can't have a cup and handle at the bottom of a trend. And then I say, who cares where it is what it is. But the important part here is we've closed inside of the cloud now for 1, 2, 3. This will be our fourth week. This is before weekly close, but this will be our fourth week inside of the cloud. So this trade has an exit, an entry, which I just discussed, and a stop loss. The exit is easy. It's the other edge of the cloud. Again, that's 42K. That's not saying we'll go straight there. This may take 6 months. It may take 8 months. It may take 16 months. I don't know. It may not work out at all, but this is the setup. The stop loss for this trade is the other side of the cloud. So in this case, the support side of the cloud that we've hopefully confirmed as support at this point. Again, I'm a little nervous that I don't think we're quite in the clear yet, right? Ultimately, when we're above 30, when we make a new high and hold that high, I'm much more confident. So you can see previously how the weekly cloud was resistance, sort of flipped a little bit, then we fell off because we had really honestly a massive head and shoulders there. You can disagree with me on that as well if you want, but we broke down. We're back inside the cloud. Great. Okay, stop loss, cloud, stop loss, basically a local low and or this trailing stop loss system called the Williams fractal. Great. It's currently at 25. And ultimately, when this thing actually gets cooking, you really don't want to drift below the Kijun, which is the red line here. Currently, that's around 23K. So if for any reason we start to flirt with a break of 25, a breach of 24, 23, this trade setup in the moment would be invalidated, nullified. That isn't to say it couldn't occur again. It just says in the moment, it's extremely unlikely. Okay. So that for me is my stop loss. I don't care what your stop loss is. I'm just telling you this is the setup. Okay. And why do these work? They're essentially just mean reversion trades. It's a 50% retracement from the all-time high to the local low in November. 50% of that move is 42K. And we do typically see these in pre-halving years. We don't see this often. Again, look, the red is the halving dates, the vertical highlights there. And I've circled the edge-to-edge trades, even in 2012. Okay. I guarantee you, well, maybe there was somebody talking about cloud, but probably not. There probably wasn't anyone discussing cloud at that time. Certainly not with these settings. Okay. So it's not like we've, altered the experiment or whatever, Heisenberg's uncertainty principle, or changing things because we're observing it, right? Schrodinger's cat, whatever. It's none of that to me, right? Again, I don't really care what it is to any observer necessarily, but we've got halving coming up and we've got an edge-to-edge trade that's active. Now, on the bearish side, in 2014 and 2018, those were really just drifts through a very thin cloud because we are post bull market at that point. In 2022, it was slightly different, but again, it was a bearish breakdown. It was bearish Kumo breakout. There's not a lot of meat in those clouds on the way up typically, which is why there isn't a bearish reversal trade for the most part. So in any event, these happen extremely infrequently, and I would argue have never been wrong. Now, we didn't have a great edge-to-edge play in 2019, but you can clearly see we hit that 50% retracement, and then we basically ranged for a year and a half. So, for any reason we hit 42K next week, you're going to have people saying, what's the next setup? What's the next trade? I don't know at that point, because here's a great example, right? 2019 to 2021, it could be anything. That's part of the cloud. That's part of the game. If we're lucky, we will have a continuation pattern like an ascending triangle or something to add, at least for me, for the confluence that this thing's actually going to hit that level pre-halving. But just based on the cloud, 42K is the level. High conviction. Now on the daily, we're also at a pretty important spot because we are just on the underside of the daily cloud. 28K would be the level if we're above that. If we hold that level, also high conviction setup doesn't happen frequently on purpose because of the settings I use. I don't have Kumo breakouts every other day, okay? On the single settings and the default settings, I guarantee you it'll be there, but I also guarantee you it'll be super, super noisy. So we're getting ready for a potential bullish Kumo breakout. After that, we'd have a bullish TK cross. We'd have a bullish Kumo twist. Actually, we already have a bullish TK cross. So the two things you're waiting for here are price above the cloud, bullish cloud twist, very similar to February this year. For me, a bullish Kumo breakout, price above the cloud, is good enough for an entry as a signal. So we're not quite there yet on the daily, but things do look ready to go, right? Now, if we look at some EMAs, if we look at a 200 week, the 20 week, and the 200 day, guess what? They're all right here. And that's really the first time that's ever happened historically, which to me just says, again, 28K is very important in the moment. It's a critical level for the next couple weeks here. Really, the only ever time these EMAs have ever been close together was at the bottom of 2015. So this is certainly a complete momentum reset from 2022, just like it was in 2018, right? All this stuff just gets reset. Not only did we reset the trend this time, but we flipped it bearish, potentially back to bullish, right? So if you're an MA fan, this is another way to look at the market. 28 to 30-ish, 12, we'll say 28, 29 is also the midline of the Pitchfork. Pick 3 points, you get a rate of change. And we're still in that bullish uptrending Pitchfork. It's been quite the chop fest this year. But if we are above that midline, it is a good sign that we will have a chance to explore the top side of this Pitchfork, which would be 42. That's how you get the edge-to-edge move, right? Thus far, we've not really broken down the previous, what I would call a head and shoulders. It's a nasty neckline, 45-degree angle. I get it, but what I'm confident in is that the market saw something there because it broke that level and sold off significantly, right? We also have the potential for an inverted cup and handle that looks to be nullified as we cross 28. So again, all these little tiny check boxes, check. The weekly looks kind of maybe, right? But on the daily, on some other moving averages, we actually look pretty good. Now there's a significant amount of volume resistance above this, which is what you're seeing on the right side of this chart. And on the downside, you see volume support at 23K and 20K. So we're not quite out of the woods yet, but we're getting closer and closer and closer. And this is the next thing, right? You always have to think, what could price look like? I'm not saying this will happen. I'm not even saying it'll look pretty. People will deny it, okay? But I'm telling you, if we do not make a higher high in short order, and we just hang around 28 to 30, this will look, again, for the 35th time this year, another head and shoulders pattern, a triple top, essentially. When you don't have a trend, when you're trying to figure out what you want to be when you grow up, sometimes you get pattern after pattern after pattern. We're seeing it on legacy too, right? It is what it is, you know? You might say, Josh, that's all you've said this year is a head and shoulders. Well, I don't know what to tell you. That's all that it is, right? So we need to fade this as well. If this breaks down, this would match and align with your stop loss on the weekly edge-to-edge trade at 25. So again, we don't want to see a break of the neckline here. 25 is important and 28 is important. Everything in between, giant mess. Okay. Now what I do like is if I look at GBTC, this chart clearly to me has had a bullish uptrend. It's had a mix of those patterns as well. You can see a little head and shoulders here. You can see the falling wedge here. In the current state, I don't have it written on the chart, but I would call this an inverted head and shoulders. You're getting in the head here, the two shoulders flanking that. And this looks ready to set up for a bullish breakout fairly soon. It's also a very good sign that the discount has continued to shrink since the beginning of the year. There's an SEC deadline on Friday to appeal the previous ruling. So if that comes and goes, I expect this thing to potentially gap up next week, Monday. And what we may be seeing here is people betting on the SEC not appealing the ruling as this thing is slowly outperforming spot. There's also an unfilled gap at the measured move from 23 to 25, let's say. So there, to me, are a bunch of reasons why this chart looks excellent for upside. You can say what you want about the product and the people, but in the moment, this may be the smarter trade because you have a discount here that is likely to continue to close. And you have, to me, what looks like more bullish TA than spot. Additionally, on the weekly, hey, guess what? We have an active edge to edge that looks also better than spot does. This was really the only previous edge to edge. Didn't quite get there on the weekly in the first go round, but did eventually make that high. Really, to me, the most important part about this chart is the discount. Price will be wherever it is when the discount's flat. I don't expect a massive premium to develop or a continued premium on this product to develop. But in the moment, that is a play. Before we talk about ETH, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Now, as everybody, for the most part, knows, Link also, decent setup here. It's a breakout trade. You can either accumulate this if you're a Marine. There's no guarantee it outperforms Bitcoin. There's no guarantee it holds these levels, but it's ranged for a year and a half, right? When this does break out, I do like 12 to 14. It may just continue to range, as an ascending triangle for another 6 months. It may continue in this massive mega range for another 6 months. I don't know. Certainly another chart to watch if you are not, just based on the technical setup alone. ETH hasn't done much. Don't expect it to do much personally. Volume's not there. VPVR support is right here. I've said this a few times, but 1990 is the level I start to care about ETH again, or sub 1,000. Between that zone, to me, it's just chop. If this does break down using the high and the low and fib extensions to the downside, 1,100 to 1,300, reasonable. Now, I wouldn't expect ETH to break down in a vacuum on its own if the rest of the market is buoyant, okay? I wouldn't say this chart looks healthy and bullish by any means, but if Bitcoin is randomly bullish, as I expect it to be potentially this week, ETH probably gets pulled along for the ride. I don't know where this goes though. Maybe from here to 2,000 is a decent setup, but I don't think there's anything screaming at me in the moment. However, again, the ETHE chart, Grayscale Ethereum product, looks much more bullish than spot ETH does. Maybe this is a massive cup and handle. Certainly is a potential inverted head and shoulders on a multi-month time frame. Cloud likes it. The 200-day moving average likes it. And this also has an unfilled gap from 17 to 19. Its discount also shrinking. So both GBTC and ETHE may have a nice pop on technicals alone, but also the fundamental regulatory aspects may be clearing up. ETHE also has an edge-to-edge trade with a target around 25. So from a risk-reward perspective, this is sad to say, but ETHE may have the best setup, okay? And another thing to note, once these discounts close, that may be better for us on the spot side because it may push more inflows into spot products rather than something with a massive discount that people think is going to close, right? This isn't about whether or not it closes, whether or not it converts. This is about hope. This is about trading the probability that it closes. And right now people are, by the looks of it, some believers that this discount will eventually close sooner rather than later. On the legacy side, obviously we've had the Hamas-Israel hot war develop, which is an absolute mess. There's really no words. You can't, I don't know what to even say about that. But on this side of the pond, we have markets closed on Monday for Columbus Day and or Indigenous Peoples Day. And then we have PPI on Wednesday and the big one, CPI, on Thursday. I'll talk about this more on Monday tomorrow, but based on Truflation, which is at 2.5%, based on the Fed's own real-time nowcasting, the month-over-month number for CPI should not be elevated. It should be relatively flat. There should be a tight range on expectations. Obviously, if it blows above those or comes way, way down, then the market's going to have a reaction. But for the most part, I wouldn't expect, based on the estimates, that CPI has an impact one way or the other this week. The next Fed meeting's on November 11th. Currently not pricing in any more hikes in the moment and just holding here, staying put for the time being. The other focus has been bond volatility, TLT, long rates, long bond rates. TLT is the long bond ETF. So as rates go up, price comes down. As rates go down, price goes up. And that's what we've had for the past 30 years. Now we're switching that paradigm, and it looks as though people aren't quite ready for that. So I do think rates could actually continue to go higher. And this isn't like 1-to-1 either. As the 10-year goes potentially to 5+, TLT will sell off in a more rapid pace. Okay. 10-year, 20-year, 30-year, all of them are rising rapidly. Something else I'll save for Monday, but just from a technical perspective, higher highs and rates, certainly possible. What I don't know is what the Fed may do relative to war in the Middle East, what that'll do for oil, what that'll do for inflation, right? That we'll need to find out over the next couple of weeks. We'll probably know pretty quickly which direction we'll be headed. That'll certainly set the tone. But in the moment, the dollar looks ready to roll over. Again, this massive variable geopolitical conflict certainly makes it harder to read this in the moment, but just based on technicals, I expect the dollar to continue to retrace, to mean revert there. Oil mean reverted significantly and then some. This may gap up pretty hard on the open. I think that opens in a couple hours at the time of recording. I don't have any TA targets left on this. The Adam and Eve was reached, hit the yearly pivot. It's kind of in no man's land here, below the 50, below the Kijun, above the cloud. I think the Middle East stuff will take over on that chart in the near term. On the S&P, it also had head and shoulders that it broke down from throughout the course of September. Bitcoin held up significantly well in the face of that, whether that's a decoupling or no one's trading both things anymore. I don't really care. It's good news for us. It's good for the narrative. You can think whatever you want about it, but it's certainly more good than bad. This daily candle on Friday retraced 1, 2, 3, 4, almost 5 days of downward volatility. Still, I would argue at the neckline of the massive mega head and shoulders here and still below the daily cloud. So for me, this is just still short-term chop zone. I have no idea what this thing is going to do, but it does lean bearish. You don't even have a bearish bearish Kumo twist yet. The cloud's still green. The cloud's still bullish. So as bullish as Friday was, it bounced on the 200-day nearly, right? I still think this is going to be a massive mega chop. QQQ, NASDAQ is inside of the cloud. Also massive mega chop. You could say, well, this is a double bottom. This is this, that, and the other thing. That's fine. But I would, at this point, which is crazy to say, I'd rather trade crypto, right? I'd rather trade those setups than worry about whatever mess this is going to be here. And just the last two setups to watch on the sidelines. This is ARK. It's an ETF. The basket is kind of atrocious. Whatever's in this thing is fundamentally probably not in alignment with anything that's going to happen in a bullish way in the near future. However, it is at a crossroads, potentially with an unconfirmed inverted head and shoulders, which also is an edge-to-edge trade. This is another reason to highlight this. Typically, when we get these mega edge-to-edge moves, we have some sort of pattern on the reversal side. At the top, we had an inverted Adam and Eve, and here we have a nearly complete inverted head and shoulders. And just to be clear, I don't think this will actually happen, but it's a trade setup that's worth watching, because if this can maintain prices in the cloud, start to get bullish, I think everyone's expecting this to sell off. I don't know of any specific sentiment that's on the bullish side here, but a new lower low would invalidate the reversal trade, and it's certainly something quite large to watch for to the upside. Lastly, I'll just mention a minor Mara marathon also has, again, a mega almost 2-year inverted head and shoulders pattern, potentially with a weekly edge to edge to somewhere to 42. So I think once you have a specific direction in mind for Bitcoin or for ETH, find that trade setup, take those trades. Great. What else can we do, right? We can dance around alternative products, right? BitX is another one. That's a 2x Bitcoin ETF. Talked about that on Twitter. But you may want to supplement and add these products to your allocations in different ways, right? That's up to you. This isn't trading advice. But as the industry has matured, we have more options now. So that's all I have for this one. Like, dislike, comment, share. Hit me a subscribe. Happy trading.